Hi everyone, welcome back to Corporate Decoder. Today we're diving into a report from Aspire Biopharma Holdings. It's a bit like a doctor telling you that you need to eat your vegetables or your health might get worse. In this case, the stock market is the doctor and Aspire Biopharma is the patient. Aspire Biopharma Holdings just got a warning from the Nasdaq stock exchange. It's like getting a needs improvement note on your report card. Nasdaq is saying, hey, you need to shape up or you might get kicked off the exchange. This report, called an 8K, is how they're letting everyone know about it. The company received not one but two letters from Nasdaq. It's like getting double the bad news in one day. These letters are about Aspire Biopharma not meeting certain rules to stay listed on the Nasdaq stock exchange. Think of it as not meeting the height requirement for a roller coaster you just can't ride. The first issue is about the company's market value of listed securities, or MVLS. This is basically the total value of all the company's publicly traded stock. Nasdaq requires this to be at least $50 million. Aspire Biopharma's MVLS has been below that for 30 days in a row. It's like if your bank account balance dipped below a certain amount and you got a warning from the bank. Luckily, Aspire Biopharma gets a grace period. They have about 6 months until October to get their MVLS back up to $50 million for at least 10 straight business days. If they can't, they might get kicked off Nasdaq. That would be like losing your spot on a sports team because you didn't meet the requirements. The second problem is with the company's stock price. Nasdaq requires a minimum bid price of $1.00 per share. If a company's stock price stays below that for too long, they get a warning. It's like a store having a sale, but no one wants to buy the product even at a discount. If Aspire Biopharma can't fix these issues, they could get delisted. Delisting is when a company's stock is removed from an exchange like Nasdaq. It makes it harder for investors to buy and sell the stock. The company could appeal this decision or try to move to a different, less strict exchange like the Nasdaq Capital Market. It's like trying to transfer to a less competitive sports league. The company is saying they're thinking about what to do, but there's no guarantee they will be able to fix things. It's like saying you'll try to lose weight, but not promising you will actually succeed. So what does all this mean? Aspire Biopharma is in a bit of trouble with Nasdaq. They need to get their stock price up and their overall value up, or they could face some serious consequences. It's like a patient needing to take their medicine and exercise to get healthy again. Now let's step back and look at the bigger picture. Aspire Biopharma is facing a challenge. They need to convince investors that their company is worth more than it currently is. They have a few months to turn things around, but it's not going to be easy. The market can be tough, and sometimes even good companies face setbacks. The company has its work cut out for it. They need to come up with a solid plan to increase their stock price and their market value. This could involve anything from developing new drugs to cutting costs to finding a partner. What are the biggest risks? Well, there's always the risk that they won't be able to regain compliance with Nasdaq's rules. That could lead to delisting, which would make it harder for them to raise money and grow their business. There's also the risk that their competitors could gain an advantage while they're focused on fixing these problems. On the other hand, there are also some opportunities. If they can successfully turn things around, they could see their stock price soar. They could also attract new investors who are looking for a turnaround story. In conclusion, Aspire Biopharma is at a crossroads. They need to take decisive action to address the problems they're facing. Whether they can do that remains to be seen. It's like watching a race car driver trying to avoid a crash. You know they have the skills, but you're not sure if they'll be able to pull it off. Thanks for watching Corporate Decoder. If you found this video helpful, please like, comment and subscribe. Let me know what other corporate filings you'd like me to decode in future videos.